Yo, what's good? We are going to do a back testing session of today's price action. It's been a minute since I posted, but yeah, I'm just going to do a back test of today's session. So you guys want to start with your news. We only had one bit of news today. So we're good on that. So we're going to go on to MNQ. What we're going to do is just going to mark previous day's high and low. The reason we're using the quadrants is because wicks are gaps, so for price to react of this daily high, it doesn't have to come and sweep the high. It can just come up to the quadrants, just like we can see, like this. As you can see, body's respecting, nobody, well, obviously not, but we're not going to be closing inside. We can look at the lower time frames, but yeah, that's how you would mark your highs and your lows of the previous day and of, well, I suppose any day. We've obviously got this big wick down here as well. As you can see, we don't come to Alexa stop. Okay, so as you can see, Monday we come down to the upper quadrant and didn't touch the 50%, which is a bullish signature in price. As you can see, we reacted off that. So yeah, step one, mark previous day high and low. As you can see, we have. And as it's a Monday, we'd want to mark out our weekly opening gap. As you can see, it's right here. So we closed here on Friday and opened here on Sunday. The opening price is 43375. There we go. So you want to mark your weekly opening gap. Let's go to Friday. Closed here, open there, bang, that's your weekly opening gap. And we can also mark daily opening gap, which is here to here. Do that on NQ as well. So we closed here. We closed here and open here. We've got a tiny one there. This one's a bit more prominent on ES. Honestly, can't really even see it, so I can literally just mark. I'll just mark that as a line. There we go. Now we can come off of electronic trading hours. One more check. I mean, we can look at the price action we're in. We've obviously got this high time frame fair value gap right there, meaning we're in a premium price. We've got these fair value gaps, so that creates a strong bearish bias for the day. we'll literally just mark the high with a line. So it means, yeah. So there's a strong drawing liquidity because we are in a premium and we've got discount arrays. And obviously our daily opening gap was in a premium. Daily opening gap also in a premium. So yeah, let's get on to the lower time frames, get on to regular trading hours, start of NQ. As you can see, this is the wrong day. Okay, the reason my eyes gravitate towards here because we had a prominent daily opening gap, but here we don't. So we open right here. Unless I marked this out wrong, I don't think I have. Daily open. Yeah, so we closed there, open there. Cool. Yeah, I didn't think I marked that wrong anyways. Cool. So, as you can see, can mark up our key times. That's 9:30. Can then mark up our macro. There we go. We'll do that for ES as well. This one's a bit more prominent of our opening range gap. And we got right down. Cool. Go back to NQ. So obviously this has marked out the previous daily high. If you wasn't aware what that wick was. Next thing we need to mark is our opening range gap. It's going to get really fucking liney. Like a lot of lines. Can change the colour of that. So like yellow or something. So mark up our opening range gap, which is from the close to the open. Do that on here as well. Close to the open, bang. So already we're framing quite a bearish day. Reason being, obviously marked up our upper wick, but on the 4-hour time frame, we are obviously in a extended premium with discount arrays below. So we are framing a very bearish narrative just from being in a premium with discount arrays low. That's the same for ES as well. We've got a discount array there and there. So yeah, we're framing a very bearish narrative. I know it's hindsight, but either take my word or don't. Doesn't bother me. This is just how I would backtest price and how I'd start backtesting price. So yeah, we're framing quite a bearish narrative, along with the confluence of this opening range gap being a premium opening range gap. So before I think I called it a discount because it was below, but because this opened higher, I would then class it as a premium. Wait, no, because we opened higher, price would have to come lower to fill in this opening range gap. So it is a discount opening range gap. People might call it whatever else, but I see this as a discount gap because we've opened higher. So to come and fill it, we'd have to come and tap into discount. So we've got quite a bearish narrative that's also on ES as well. As you can see, we open higher, meaning we'd have to come lower, aka come into discount to fill it. Now this does actually look to be quite a decent day of trading. Reason being, we've got our daily opening gap right here. So think about it like this. We open higher. Daily opening gap can be sort of a key level to then bounce back down. So daily opening gap, higher, taps and bang. That's a quite a nice way to open to see a bearish day. So as you can see, price opens, we come up into this daily opening gap, and then we send price lower after taking the main key level out. So yeah, as you can see, price was respecting this nicely. You couldn't take, I mean, on ES you could, but on NQ obviously you can see we come up higher. Reason for that is because the reason why we're respecting this so much is obviously this is previous day's high wick. So where we've obviously made this high and wick down, we've marked that wick and marked our quadrant. So the reason we're reacting so nicely with this daily opening gap is because it is in line with 50% of the daily wick. On NQ, as you can see, 50% of the daily wick was a bit higher than the daily opening gap, hence why it's a bit less smooth than ES. ES literally just looked like it tapped this and just went. So yeah, that's the 5-minute chart. Obviously we wait for our macro time. We'll start with NQ. As you know, we'd have had a bearish bias for these two levels. For an imbalance, we can obviously see we're in a premium. With imbalances even on regular trading hours. This does also look like a market maker sell model because we've got, I've never studied it, but I suppose original consolidation, come up, consolidate, come higher to key level, and then we should aim for this and this. And I suppose on NAS we've got the original consolidation, move up, take out key level, and now we've taken out the low of the original consolidation anyways, but I won't get into that because I haven't learned about it, but I just know the basics. Anyways, we're for our macro and have had our bearish bias. We'll zoom into price. We can see a macro comes. As we know, news was released at 1:30, so 8:30. We can put that on our chart, but it's orange news. I don't think it was that relevant. Yeah, that was news, so that's not really that relevant. I suppose we could mark the high and the low of it to see how price respects. I mean, obviously 9:30 we do come and touch that data low and bounce up on electronic trading hours. We can mark it on ES as well just to see, you know, it's not about being 100% right every single day. So yeah, just mark stuff out, see what works, see what doesn't. I mean, we'd have had the SMT anyways for the morning, as ES did not come down to this data low. NQ did, as you can see. We'll delete that now because doesn't look like it's that relevant. But yeah, just a little test on myself. So we'll go back to regular trading hours now. Obviously we wait for our macro, so we've got our draw on liquidity, which is bearish into these gaps on NQ and ES, and we've got our key levels marked. As you can see, the main key level is 50% of the daily wick, which we do take out, meaning cool, we are setting ourselves up to be bearish. We can also mark this wick on here. As you can see, we do not close above the lower quadrant, so showing bearish signatures in price. And let's mark this wick as well. Let's see what this wick does. This wouldn't have been the main wick, but as you can see, we do not close above 50%, and then for the main wick we don't close above the lower quadrant. So yeah, looking good so far for a bearish trade. Obviously this is hindsight, but regardless, we'll mark that same wick on here. Wicks, as you can see, the bodies are respecting 50%. We tap it to the tick, we miss it by 1 tick, but we're respecting the bodies. So we can delete that now. Just it's an extra little confluence. We'll mark this wick as well. We don't even come to 0.5, so that's also a good signature. So yeah, everything is stating to be bearish. So we will mark our CSD now. In this example, this was the last up close candle before we reached into this key level. So for me, that would have been my CSD candle right there on the 5 minute. So we mark that. Obviously for the trade, we've got discount opening range, drawing liquidity, we've got a higher time frame, key levels being this daily wick, plus the daily opening gap being there as well. Plus we're in a premium, everything's shouting bearish, we've just got to find the entry. So for me, whether we'd have got a trade inside of this macro, who knows, might not have. We'll go and check ES as well after, but on NQ it looks like we got the CSD after macro time. So in this example, we will double check, we'll have a look, we'll see what price presented. We'll mark up our second macro, we'll go into the lower time frame. Looks like the trade probably would have been on ES, but we shall see. So we've got the CSD here. We'll go on to the 1 minute time frame, see what price is telling us. So obviously we get the macro, we make the Judas. If you'd have had a 1 minute CSD, it would have been this one. We come down, we respect it. Let's mark the bodies. As you can see, we don't get a body close above 50% of the body CSD, which is a very good bearish signature. We obviously tap 50% a lot. Tap it there, miss it by a tick. We displace down. We use the lower part, the opening, to send price lower. Yeah, so we can see that we've come up, we've had our Judas swing, CSD'd out, and I mean that looks like a 2022 model right there, but unfortunately the macro did end. We will see after. So if we look at this candle, 5 minute and the 1 minute, this is where we confirmed the CSD. So from here, what I can see is, so this is the 5 minute candle that closed and confirmed our CSD. So as you can see, we closed below it, then we'd look for this trade in this little wick here. So if you was to trade outside of the macro, and what does price do? There we go, this little wick from the 5 minute. So we're going to use that wick to find a potential entry. And as you can see, we then tap into a bearish fair value gap to that delivered price to our first level right here. So if you was to enter outside, you'd obviously have to wait for the 5 minute CSD. Your stop loss could either go the wick or the top of the order block. That's quite a nice place for a stop because we've got this fair value gap, breakaway gap now, stacked with an order block. And yeah, as You could add your stop there. Targets, well, obviously are bearish gaps right there, and obviously our weekly opening gap as well, with a target 50%. There you go, and there you go. So that's your trade outside of the macro. Clean trade. Would I wanted to take it outside the macro? Probably not. We will mark up 10.20 to 10.30. Now if you follow Blasian, you know why. As you can see, we do have this down close, this up close candle, turned order block. Could have got an entry on any of these wicks within the order block. We can mark up the body. As you can see, we failed to get a body close above 50%, and it looks like we closed on it but not above it of the lower quadrant. So perfect bearish signature. Could have got any of these wick entries. We kind of chopped about. It's called time distortion. To any of these wicks, you probably would have got in on the first. You would have bought up there, and I do want to mark that because I don't think that that entry was provided for the fair value gap. You would have had your stop either here, bit tight, or you could have had it above the breakaway. No, not the breakaway, the gap up here. Either one would have secured you decent trades. This one being better RR, and it's inside a secret macro, which if you want to find out about, go to Blasian. But yeah, perfect delivery of price right there. So that's 2 entries. We can delete this now. And then obviously price just delivered out 10.50 macro, just kind of chopped. We've already made the move for the day. The daily draws and liquidity have been hit, so this will probably just be the closing price. We'll probably close back inside the range, but this is literally perfect delivery of price. Barely any down close candles, all from our key level being the daily wick and the daily opening gap, having a discount opening range gap, and yeah, so that's done on NQ. We'll go on to ES now. I need a drink, my throat. As you can see, same thing. We literally explained this a second ago. We've got a discount opening range gap. Macro happens. We push up. We get a Judas. Now this is beautiful on the 1 minute. Let's have a look at the 5 minute. See what it's telling me. Yeah, so we got our CSD within macro time, which is absolutely perfect. So macro comes up, we push up into our key level. This trade is beautiful. Pushing into key level, we push into the CSD. Do we touch the lower quad? Yes, we do. That's literally perfect. And we sell off. So that could have been your easy entry. And I know it's hindsight, but look, if you want to stay safe for stop loss, you could have put it above this daily opening gap. You could have put it CSD body. Could have put it at the wick. This wick, like, I would have put it probably here. And then your targets are right there. 9R, just like that. That's literally a textbook trade. We'll look on the 1 minute to see if there's a refined entry as well. NQ, you would have used for your SMT. We would have seen. I don't think I'll be able to get my NQ drawings back. No, I won't. Let's just put it in here quick. So this is obviously the extreme FVG this is the higher FVG here to here, and this one is the extreme. And as you can see, got a 5-minute price delivered to both of these levels, and ES only delivered to this one. So you would have seen that at 10:30 we delivered to both, and at 10:30 we just delivered to the top one. So that's your SMT. So whether you would have closed fully or partial the majority, because you'd have had a 4-hour SMT right there. You can mark, I suppose, like it would have been more precise, like around here. Let's see. You'd have marked it right there. ES would have been from here to 10:30 wick. So there's your SMT for profits. So you could have used that to take full out. But yeah, literally a perfect day to trade. We'll look on the 1 minute now. We'll delete that. I mean, look at that entry. Oh my. So yeah, we got our CSD. What time? I think it's 10. Start looking for trades in this wick right here. So this would be our 1 minute look for trades. As you can see, in this 1 minute wick, I want to be precise. I want to make sure this is right. CSD at 9:55. Okay, so from 9:55 you'd have been looking for 1 minute entries. So 9:55. Oh no, to 10 obviously. So we got our 1 minute Judas. What do we tap into this FVG? We'll delete that. What do we do with this FVG? Now we come up into 50%. We body respect. That could have been your entry on either the upper, the lower, or the 50%. We'll put it here. Stop would have been tiny because we've got a big fair value gap. You could have put it right there, 5 ticks, or you could have put it above, right there, and then 8.6R, just like that. Bang. So yeah, beautiful day to trade. I was out. I need to trade on my futures account. Start working on it. I haven't traded on it. I think psychology vid, reason being. So yeah, I might need to make a psychology vid, but yeah, literally a clean day. Beautiful delivery to draws and liquidity, and yeah, that's it for today's video. I'll see you guys in a bit, and peace.